In the summer of 2020, Warren Buffett broke from his usual pattern and announced he had invested in several companies outside of the United States. These investments surprised many, as they marked a shift in Buffett's typical investment pattern, which had primarily focused on US-based companies. Buffett revealed that Berkshire Hathaway had quietly accumulated stakes of approximately 5% in 5 major Japanese trading companies. The trading houses, or sogo shosha, are vital to Japan's economy, with diverse portfolios spanning energy, metals, food, and textiles. Each of these companies plays a central role in global trade, acting as intermediaries in the import-export business, while also managing a wide range of domestic and international ventures. By April 2023, Buffett increased his holdings in these companies, raising his stake from around 5% to over 7% in each firm. His increased commitment was a sign of his growing confidence in the Japanese market, despite its challenges such as an aging population and a slow economic growth. The move was interesting not only because it was outside of the US, but also because Japan has been struggling with deflation for decades. The Japanese stock market reached its peak during the height of the asset bubble in 1989, where the Nikkei 225 index closed at an all-time high of 38,915 on the 29th of December 1989. Since then, the market has experienced a prolonged decline, a stagnation phase, and only partial recovery in the decades that followed. During the 1980s, Japan experienced rapid economic growth, fueled by speculative investments in real estate and stocks, easy credit, and overly optimistic expectations about future growth. The asset price bubble drove the stock market to unprecedented heights. However, this bubble was unsustainable. The combination of over-leveraging, speculative investments, and excessive monetary easing created a fragile economic foundation. When the bubble burst in the early 1990s, Japan's stock market crashed along with the real estate market. By 1990, the Nikkei 225 had fallen over 40% from its peak, signaling the start of Japan's lost decade. This period was marked by deflation, slow economic growth, and banking sector crises due to the accumulation of bad loans. The government attempted stimulus packages and monetary easing, but these measures failed to fully reignite growth. From 1990 to the early 2000s, the Japanese stock market continued to slide, reflecting a stagnant economy and deflationary pressures. By 2003, the Nikkei had plunged to 7,607, marking a nearly 80% decline from its 1989 peak. Buffett's continued investments in Japan underscored his belief that the country's large, diversified businesses can perform well over the long term. He has also expressed confidence in the leadership and management teams of these companies, believing that they are well positioned to navigate future challenges. It seems that Buffett's imprimatur on the Japanese market has attracted other investors to the country. On the 18th of September, Bain Capital announced it had reached an agreement to take over the Japanese logistics company Trancom in a management buyout. Bain Capital is a prominent American private equity and investment firm founded in 1984 by former Bain & Company consultants, including Mitt Romney, T. Coleman Andrews, and Eric Chris. The firm initially focused on venture capital and private equity investments, utilizing Bain & Company's consulting experience to help companies improve operational efficiency. By the early 2000s, Bain Capital had broadened its investment strategies, diversifying into credit, public equity, and venture capital. The firm became known for its leveraged buyouts, where it would acquire companies using a mix of debt and equity, aiming to improve operations and increase the company's value before selling them for a profit. Some of the firm's most notable deals in the 2000s include the buyout of Toys R Us in 2005 for $6.6 billion, alongside KKR and Vornado, and the $26 billion acquisition of Hospital Corporation of America in 2006. These large-scale buyouts positioned Bain Capital as a key player in private equity globally. The firm also expanded internationally, establishing offices in Europe and Asia to capture investment opportunities in those regions. By 2010, Bain Capital had firmly established itself as one of the world's largest private equity firms. It continued making notable acquisitions, such as the $2.1 billion purchase of NYOB, an Australian software company, in 2011, and the $2.4 billion buyout of Blue Coat Systems, a cybersecurity firm, in 2015. Today, Bain Capital operates across 22 offices globally, investing in private equity, public equity, venture capital, and credit markets. With over $185 billion in assets under management and over 1,400 portfolio companies, Bain Capital remains one of the most influential private equity firms in the world. Trancom is a Japanese logistics and supply chain management company, which was founded in 1955. It was originally named Nagoya Ryotsu, primarily focusing on transportation services. Over the decades, Trancom evolved into a comprehensive logistics provider, adapting to Japan's rapidly industrializing economy and the growing demand for efficient supply chain solutions. In the 2010s, Trancom faced challenges similar to those encountered by other Japanese logistics companies, particularly labor shortages due to the country's aging population. The 2024 problem, a term referring to the critical shortage of truck drivers due to new overtime restrictions, posed additional challenges. To address these, Trancom sought to enhance its operations through automation and by pursuing international expansion. Despite these difficulties, Trancom has maintained strong financial performance, becoming one of Japan's leading logistics providers. The management of Trancom now believe they can better operate the company out of the glare of the public markets and launched a management buyout with Bain Capital. The deal values the company at 100 billion yen, approximately $706 million, and has the support of the majority shareholders. Some analysts have noted that the deal may undervalue Trancom, as other companies in Japan's logistics space have fetched higher valuations. However, the deal is proceeding without significant competition from other potential buyers. Key stakeholders within Trancom, such as its founding family and major shareholders, have agreed to sell their shares as part of the buyout. The offer period runs until the end of October 2024, with Bain Capital expected to complete the privatization process by early November. The question we are asking today is, can an investor generate a healthy profit by arbitraging the deal? The deal with Bain is all cash and values Trancom at 10,300 yen per share, a premium of 41% to their trading price prior to the announcement. An investor committing to the deal today, by taking a long position in Trancom and holding until the deal closes, can expect a return of 16.65%, or an annualized 104.77%. Due to the high probability of the deal closing and the short holding period, the risk-adjusted return is 81.25%, and the expected loss, should the deal fail to close, is 20.73%. Given the friendly nature of the deal and the high probability of the closing, an investor may want to employ leverage to boost returns. If we assume a 50% leverage position, an investor can expect a return of 32.5%, or an annualized 204.53%. This results in a risk-adjusted return of 157.99%, but an expected loss of 42.24% should the deal fail to close because of the effect of leverage. The additional consideration of which an investor needs to be mindful when it comes to international deals is foreign exchange volatility, which can materially affect returns when currency is converted back to your own national tender. Recently, Japan has made a significant shift in its monetary policy by ending its era of negative interest rates. After maintaining negative interest rates for 8 years as part of a large-scale monetary easing strategy to combat deflation and stimulate economic growth, the Bank of Japan raised rates in 2024. The bank increased short-term rates from negative 0.1% between 0% and 0.1%, marking its first rate hike in 17 years. This decision has affected the value of the Japanese yen relative to other currencies and has brought an end to the Japanese carry trade. So, what does everyone think of this deal? Let me know in the comments below, and don't forget to like and follow if you found the video useful. Be aware that all the figures mentioned are the date of my calculations and will change in line with the share price. Any changes to the deal terms and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you for joining me today, and until next time, have a great day.